Hi there, welcome to Kneppy Invest and welcome to another technical update video. Over the past day and a half, I have gone through the charts. I have looked at the weekly charts. Sometimes it's good to have look at monthly, weekly, daily, even shorter term charts just to get a different perspective. And that has happened today. Not only will I go through the indices, commodities, we'll have a look at Bitcoin and also the bonds. I have 38 companies to share with you. Maybe that's too much. Wait to be seen whether that is true. But there are a plethora of charts out there that are looking interesting right now. And the whole reason I do these videos is just to share ideas with you. What you do with those ideas is up to you. Now let's start with the indices, starting with the XJO, the ASX 200. For those who don't know anything about the XJO, over the past 15 years, it has been trading in a channel since the end of the GFC, an upward sloping channel, portrayed by these two upward sloping solid orange lines. Only twice has the XJO gone above or below the top or below, above or below the trading range. The only time it's gone below the bottom of the trading range was during the COVID-19 financial panic. There it is. For about, and this is the weekly chart, by the way, for about 6 or 7 months. That was prime buying time. But absolute panic in the markets, particularly before March of 20, before we saw all this stimulus from the governments, and then the V-shaped recovery in the market, went back above the top of the trading range, and there was still good buying for another few months. In fact, the good buying lasted all the way up until June 2021. I think it was actually might have been July or August 2021. When for a very brief moment we went above the top of the trading range. Here it is. 9th of August 2021. That week we went above for a very brief period of time. And the top at that point was 7,600. And the XYO has struggled to get above that point, that level, for about 2.5 years. But over the past few months, we have seen the XGO get above 7,600. And right now, the XGO is at 7,847. And this is looking pretty bullish, to be honest with you. All-time highs, 2 good weeks in a row, and there's nothing you can complain about right now with the XGO. I think this is a breakout. Possibly we are in a new bull run after a period of time where we're just consolidating after that beautiful run back in late 2020 and early 2021. Now, not all the indices are looking as bullish as the XGO, in particular when you talk about the small caps. However, even the small caps, the small ordinaries here, XSO, is starting to look more bullish. So if we just look at the weekly chart again, we are at about, last time it was this high, was in August 2022. So we're at about, what's that, 18 months? 18-month high when it comes to small ordinaries. And if you do actually look at the daily chart here, it's looking really good. It's starting to, in fact, if I saw an individual company's chart look like this, I would be fairly bullish. So it's looking good for the small ordinaries. That does not mean all the small cap companies on the ASX are starting to go on a run. You'll start to see the bigger companies on a run first. And when I say bigger companies, I'm talking about those companies who are highly profitable with a market cap of, say, $1 billion. I'm pretty sure Flight Centre, companies like that, are in the small ordinaries, even better quality companies than Flight Centre. And then eventually, if we continue to see this bull run, eventually those small cap companies, and when I say small cap companies, I'm talking about companies with a market cap below $50 million, eventually though they will go on a run too. Now, the American markets have been looking bullish for a while, particularly the NASDAQ and Dow Jones, S&P 500. So this is the weekly NASDAQ, all-time highs. Now, it did have a bad week. I'll say it, bad week. The NASDAQ was actually down. I'm just going to decrease the size of my video there. NASDAQ was actually down 1.6% for the week, which is interesting because the XJO was actually up 1.3. So a little bit of pressure in the technology space. That's understandable because it's been on a beautiful run. And to be honest with you, the bull run just continues. In fact, if you just look at this weekly chart, in fact, if you zoom out a little bit more, the COVID-19 financial panic is just a blip. I can just see it here. It's a blip. The Nasdaq went from 9,500 down to 7,000 during that period. Now it's 18,000. So it's actually almost twice as much, twice as high as it was just before the COVID-19 financial panic. And this is true in regards to most markets through time. If you look at the Dow Jones, in fact, let's do that right now. The Dow Jones, you can see the COVID-19 financial panic was more of a blip on this indice, but still, the Dow Jones is just coming off an all-time high. But if you say, look at the monthly chart, and this is not logarithmic, this is, so you could actually just go logarithmic, which I think is, here it is. If you go to the logarithmic chart and go all the way back to what we call that, the Great Depression, what do you call that, the drop during the start of the Great Depression, whatever you call that, you can see the Dow Jones fell from about 400 all the way down to 40. Yeah, it was like a 90% drop. So you can see it in the logarithmic chart, but if you zoom out, that's just a blip, even on the logarithmic chart. But if you look at the non-logarithmic chart, let's go back to the normal chart, regular chart. It's an absolute, you can't even say it. You can't even say it. That's why we actually use logarithmic charts when we're looking at longer time periods, because percentage rises. So if you talk about the Dow Jones at 20,000, 10% rise in the Dow Jones at that point is a 2,000 rise. But if you go back to like the 1930s, 2,000 rise in the Dow Jones would have been unthinkable because there was only 400. So that's why you look at logarithmic charts for the long term. Some people even have said to me, you should use or look at logarithmic charts for the short term. I actually don't acknowledge that. I don't believe in that. I think just a regular chart in normal times is good enough. But definitely in longer time periods, a logarithmic charts is best, without doubt. There's no argument against that. And the Russell 2000. So the Russell 2000 is sort of fairly similar to the XJO, or maybe even, let's go back to the weekly chart, the XJO, or maybe even the XSO. This is a small cap proxy. In fact, they call it this US small cap 2000 index, but this is the Russell 2000 index. The smallest 2000 companies on the Russell 3000. So yeah, small companies, or smaller companies relatively speaking compared to the Russell 3000. And this has broken out too. So we're all looking at bullish indices. Now, something I've not looked at or showed in this video before is other indices, say the DAX. The DAX is actually looking really good. DAX looks really bullish. That's pretty good. The UK 1000, what's that called? The FTSE 100, that's just going sideways. This is probably the most boring indice you'll ever see. This goes all the way back to 2015 and not much happening during this 7-8 year period. But definitely the DAX looks pretty good. Some other indices, Hang Seng, I believe, that looking pretty bearish, which is understandable. And that's the only foreign indices I've got on here. I probably should include like the Japanese, maybe some other ones too. But the ones I really follow were the DAX, UK, Hang Seng, the Nikkei I have been following in the past, but I haven't got it on this particular watch list. So Hang Seng looks pretty bearish, although the Asia ETF, which I'll show you later in the video, actually looks pretty good at the moment and looks like it might be breaking out. So that's really all I'm going to show you in regards to indices. Now let's have a look at commodities. And I've been saying in relation to gold in quite a few of my recent videos, past videos, that eventually gold will break out above 2000, what is it, 2000, whatever it is, 2060, I think it was, 2080. Eventually it's going to break out above that. I just didn't know when. It could have been the next day, 1 week from when I record that video, a month, 1 year, 5 years, but eventually it will break out. We have seen a breakout. I am calling it right now, which is, or can be, a dangerous thing when you're calling a breakout. But this is gold's weekly chart. It reached 2080 back in July or August 2020 and has been in this channel ever since then. And every single time gold got above about 2060, we saw some weakness. We saw a false breakout back. Was that in December? Yeah, December, early December 2023. We saw a false break. In fact, there were still quite a few commentators getting really excited about that false break, even when it was shown to be a false breakout a few days later. They were getting excited about the breakout in gold. It was a false breakout. We had to wait for the gold price to get above 2080, preferably on a strength. And well, has it done it in the last week? It has risen significantly up to 2,180. This is a breakout we've all been waiting for. I've been waiting for, because I do have a few gold companies and a few gold exploring companies. And just like when I was talking about the small caps, so the better quality gold companies will go on a run first, and then eventually that will flow down to the exploring companies. So actually, if you have a look at exploring companies charts right now, the gold exploring charts, they haven't gone on a run just yet. It will come if gold continues to move higher. So if you look at the daily chart, it's a beautiful daily chart, a perfect breakout. This is exactly what you want to see when something is breaking out. A really good day. What day was that? That was on the Friday, the 1st of March, up 1.9%, which doesn't seem a lot, but it got to 2080 on that day. And whenever we've seen gold to get 2018, we've seen some weakness. The next day, no weakness. And that bullishness continued. The reason why that bullishness continued is because all those people who were selling gold in the past, when it got above 2080, went, oh, wait on, I'm not going to sell gold now. It's showing some strength. I'm going to hold on. And they've held on, and that's why gold has kept on going up. Now, I wouldn't be surprised to see gold pull back all the way back to 2080 and test it. That will be really healthy and important to see gold test 2080 again and then pull higher. Doesn't mean it will, but that would be a healthy move if it does happen. But there is potential. It might break down below 2080 again. But this is the most bullish move I've seen in gold. We've seen in gold in history. Well, maybe not history. I'm being hyperbolic saying that, but since I've been covering gold or looking at gold, it's one of the most bullish moves I've seen. Well, to be honest with you, back here was really bullish. Gold was on a massive bull run from 2019 all the way through to 2021, or the middle of 2020. That was a beautiful gold bull run. But if you look at the weekly chart for gold, yeah, so back into this bull run in gold from early 2000s all the way to 2011, I wasn't following gold at all, but that's a beautiful chart, weekly chart for gold, topped up at 1,900. And I do remember watching the show on the business channel, Your Money, Your Call, and that would have been maybe 2012, 2013, and gold companies' share prices back then were really volatile, and you can see why. That was in a downtrend right now. And when anything's in a downtrend, you will see a lot of volatility in the share price or the price of whatever is in a downtrend. So that's probably why one of the things I do remember in regards to Your Money, Your Price was the volatility in gold companies back then. So even though I don't remember, and this chart does look really good for gold back in the 2000s and early 2010s, this is the most bullish move we've seen for gold for a long time. Other companies, let's have a look at uranium. Few down weeks in a row. So it's gone from above $100 down to $91.25. If I see uranium getting towards $80, that would be a good, maybe not a good sign, but I'll become more interested in uranium companies potentially. That would be sort of a zone of support, the long-term or the shorter-term moving average channel, which is shaded in green. It has been a good area of support for uranium in the past. You can see back here in 2022, March, April 2022, it ran up really hard. Uranium ran up really hard, then pulled back into that green zone, and then eventually it started to go higher. What else? So I won't look at Bitcoin just yet. Copper. What's copper doing? Nothing much. Still waiting for copper to go on a run. I own one copper company, although Sandfire looks really interesting. I'm going to show you Sandfire later in the video. So for some reason, Sandfire's chart is breaking out, yet copper looks pretty boring. Nickel, don't really look at nickel all that often, but nickel's pretty boring too. Oil, I'm pretty sure oil is pretty boring. If I see oil get down to $65, I would become keen in buying some oil companies. But I do think I'm showing you Karoon in today's video because Karoon's probably the most interesting of the oil companies. I don't like Woodside, don't like Santos. Both of those charts look pretty boring. Silver should be looking pretty good if silver's not breaking out. Okay, so here's an opportunity. Gold's breaking out, and then eventually silver will break out too, because I'm pretty sure silver lags gold a little bit. So my play in silver, and the only play I know in silver, is Adriatic Metals. They have a silver producing project or mine in Croatia. I think it's in production. If it's not in production, it's going to be in production fairly soon. So keep an eye on silver. So if gold keeps on moving higher, eventually silver will as well. What else? Coal. Coal's pretty boring. And lithium. It's not lithium, that's iron ore. Oh, iron ore. Yeah, iron ore. Yeah, iron ore's had a tough month or so, but it's still well above a support level, which is $80. And at this point in time, yeah, I'm with iron ore, but lithium. So remember, lithium had a bit of a bull run a week ago. Now it's fallen. So lithium, actually, let's have a look at the line chart for this. Yeah, so it had a little blip up, and it's come back down. So there's no breakout in lithium at all at this point in time. That's one of the lithium charts I have. That's lithium futures. If you have a look at lithium hydroxide, that's pulled back as well. Lithium carbonate has continued to go down. In fact, it's all-time low. All right, so the enthusiasm in lithium is probably a little bit overdone. Let's have a look at bonds before we have a look at Bitcoin. And we'll continue to have a look, not at the line chart, go back to candles. So this again is the weekly for the 30-year US government bonds. Still an uptrend. I'm not calling it down an end to the uptrend, but I want to say it's a strong uptrend. So yeah, I'm confident neither way, whether bond yields will go higher or lower just by looking at this chart. If it falls below 4%, that would be really good for bond yields to go lower. So 4% would be the key level for US 30 years. And if you look at the Australian 10 years, it's a fairly similar chart. And if the Australian 10-year is below 4%, but it has to get below about 3.8% for me to be bearish on that. So let's have a look at Bitcoin. I was listening to a podcast this morning, and I didn't see all this. So apparently when Bitcoin fell like 8% one day, like 2 weeks ago, the whole media was on top of it saying, well, the Bitcoin is crashing. This is after it rose well over 100% in the previous year. So let's have a look at Bitcoin, the weekly chart, and see if you can see that blip, that 8% down day. You can't see it, can you? You cannot see it. In fact, Bitcoin is almost at all-time highs. It has closed at all-time highs. Yes, it is right on the all-time highs. So back in November 2021, Bitcoin got to a high of 69,000 US dollars, and it is now at 68,438. So right on the all-time highs we saw back in 2021. And just look at that chart. The last 5 weeks we've had 4 really big up weeks and 1 week when it's sideways. So you can't see that one day where it went down 8%. This is the problem if you just focus on one-day trading. If you just listen to the media and got really concerned about Bitcoin, you might have sold out, and that would have been a massive mistake, because let's have a look at the daily chart just to see that one day went down 8%. In fact, on this day, it went down 6.7%. It was even down more than that on the day because there was a lot of buying during that day, and it's back up to where it was before it collapsed. Yeah, so that's pretty bullish chart for Bitcoin. In fact, if you have a look at the 15-minute chart, there it is. There's a collapse. It was like a 45-minute period. It collapsed. Maybe that's the wrong. Yeah, here it is. I think that's it. Here's the collapse. That wasn't it. That was just a minor collapse. Here's the collapse. It went from 68,800 all the way down to below 60,000, and you can see actually this is really good. This is really good because you can see the volume. So at 5:45 a.m. my time on Wednesday, the 6th of March, and I wasn't following the market at this point in time, Bitcoin fell 1.39%. The most important thing on that 15-minute period is Bitcoin was down a lot more than that. And you can see a high shadow or a very long shadow on that particular 15-minute candlestick. There was also some buying coming in and an extra demand the 15 minutes prior, but a lot of demand for Bitcoin on that 15 minutes. And that's why you have a really long tail or shadow below their main body. On that 15-minute period, the low in Bitcoin was 59,313, and it closed at 15 minutes at 61,443. And the other thing to look at is the volume. You can see massive volume coming in for Bitcoin, not only in that 15 minutes, but 15 minutes, in fact, 30 minutes to 45 minutes on either side. So always have a look at volume. And that means there is a lot of supply coming in. Not supply, a lot of demand coming in. And that's why that was a bottom. So the volume, when you see sort of a reversal or a build-up in volume, if the price of something is dropping, that's a good sign the bottom is just about to be reached, and that was a bottom. So this is why looking at different time frames is very important. 15 minutes in this case was the ideal. If you go down to even probably 1 minute, that probably look really weird. You can see, yep, here it is. No, that's the wrong day again. Here's the collapse. Is that the collapse? Am I looking at the right day? Oh, I'm not even sure I'm on the right day. That's the 9th of March. Oh, yeah, it's 1 minute, so you have to go way back. That was that short-term correction I was talking about earlier that had me confused at the start of my Bitcoin spiel. Here it is. Here it is. I can almost guarantee you the highest volume came in when the low was reached, or on either minute on either side, or a few minutes on either side. You can just see the rapid recovery. And here it is. Yeah, here it is. So here it is. And the highest volume, well, the highest volume actually came in a few minutes later, about 5 minutes later, but there was an increase in volume, a definite increase in volume during this period, and then it collapsed. So you could say this was capitulation, those who are getting fearful. A lot of day traders probably selling out at this point, and then the rapid recovery, beautiful, beautiful V-shaped recovery. And just look at volume. And then volume just dried up. Anyway, so you can't be anything other than bullish when it comes to Bitcoin right now. So it's right on the all-time highs, and that will be a resistance level for Bitcoin because everyone knows, well, maybe not everyone, but a lot of people do know the all-time high for Bitcoin, and there will be a little bit of selling pressure. And if this level for Bitcoin is broken, all bets are off. Who knows where the high is going to be for Bitcoin? It's a really good volume coming in the last few months as well. Nice volume. I wonder if Ethereum's looking the same. Ethereum is looking beautiful as well. That's still off from its all-time highs though. Okay, so that's all I got for the indices, commodities, Bitcoin, and the bonds. 38 companies to show you right now. Starting off, whoops, I'm at the wrong, what do you call it? The wrong watch list. Okay, so the theme I want to show you today is weekly charts. So a lot of these companies, I just had a look at the weekly charts, and then I went down to the daily charts to have a closer look if I saw something I liked. For Metals X, this is the weekly chart for this company, and you can see the volatility. And that's one thing I've known about Metals X. I don't even know what they're mining. Is it nickel? My video was really off screen then. I'm pretty sure nickel, tin. Okay, that makes more sense. So the one thing I do know about Metals X is the volatility in the share price. And I missed this beautiful uptrend in Metals X from late 2020 all the way through to 2022. I still remember thinking, oh, this might be a good trade. It was a beautiful trade. Share price went from about 10 cents to a high of almost 80 cents during a short period of time. And then the price of this company collapsed. And it has been sort of trading in a channel. You'd definitely be able to see this channel when you look at the daily chart. I had a look at the weekly chart and I just saw the share price take off in the last 2 weeks. and the share price is now at a multi-year high. So I went down to the daily chart, and the daily chart looks pretty nice. So we have had a breakout in Metals X. I don't know why. It could be just tin prices might be going higher, and some really good volume coming in. So this is a potential breakout. So again, I'm just sharing ideas with you. Whether you like or know anything about Metals X is up to you. But the share price at, was it 37 cents or so? 37 cents. Last time the share price was this high was way back in January 2023. So we are talking about a one-year high for Metals X. So a nice looking chart for you. Let's have a look at Select Harvest. This is a company I decided to trade based off, and when I say trade, I'm talking more in the medium to longer term. And this comes around to almonds. So this company is all about almonds. And I just knew that possibly almond prices were going to be at multi-year lows. Now, I got in a little bit too early. So I got in somewhere around here, and then the company released something bad in November. That's why the price of Select Harvest just absolutely collapsed. But I maintain this was more of a medium to longer term trade. Share price finished, or went all the way down to $2.70 in January. And then the company released pretty good news back in late January. And this was all around my whole thesis for buying to Select Harvest, that their crop was going to be pretty good. Plus, almond prices are going to rise because of troubles with the crop in California. So sometimes, and maybe my biggest fault is sometimes a little bit too early with my thesis around plays. And this was another case where I was a little bit too early, not a lot early, but a little bit too early. But Select Harvest share price is on the rise. Now, if you have a look at the weekly chart, now this is a commodity company. So the price of Select Harvest will be highly correlated to the price of almonds. And you can see it just by looking at this multi-year chart going all the way back to 2013. But at the share price of 270, that was a 10-year low in the share price. And you can see back in 2015, share price of this company went to a high of 1350, and that was because of really high almond prices. So this is just the short, not medium-term trade, thinking that eventually almond prices will recover. And when they do recover, and hopefully Select Harvest share price goes up to say maybe $6 or $7, I will take profits and don't really care about what happens with the almond prices after that. Now, I was talked about ETFs. I only own one ETF right now, and that's the Asia ETF, the Beta Asia ETF. And you can definitely see this is a really nice uptrend, downtrend, leveling off, consolidating, and it looks like it is breaking out. There it is, breaking out. It has trouble getting above, just extend that line there, getting above $7.90 to $8. What you might do, what I do sometimes is I put two lines, because I don't think of resistance as one level, like $7.90 or $8. I think of it as a zone between $7.90 and $8 for this particular ETF. It got to $8, $7.90 back in January of 2023, got to this zone in July, September, November, and fell back. Got into this zone back in February. You can see it not falling back. That was the first good sign. So not a lot of selling. And then it got above $8 a few weeks ago and has continued to climb since then. So this could be a breakout for Asia ETFs. I did have a close look at the constituents of this particular ETF, and there were some companies that were in this ETF that I would like to own individually, but this is my way to get into it. The other thing that attracted me to Asia ETF was just the volume, particularly when it went, particularly at this last low. Some really big volume coming in then, and then just after that low was reached and the price of this ETF started to rise. Some really good volume coming in. That's a good sign moving forward that someone likes this ETF. And we have seen the good volume continue since then. Novo Nordisk. So this is one of the individual companies I do own, and this is my buy price, 692. I probably should do this for all companies I own, just so I know when I bought into a company. So I bought into Novo Nordisk just based off some of the drugs they have. I'm fairly bullish. And this company has a market. That's wrong. It doesn't not have a market cap of $4 trillion. I'm pretty sure, trading view, that would mean this company is the biggest company in the world. So sometimes be wary of what you might see in TradingView, ComSec. Some of the stuff they do report can be wrong. So I bought into Novo Nordisk. There was a nice little break at that point. Share price actually dipped a little bit below that a few months later, but it's been on a tear ever since. And they reported something really bullish on the 7th of March. It was the results of one of their drugs, and it looks way more promising than even I thought was possible. And that's why the share price of this company up 8.3%. So this is a bullish looking chart. So let's have a look at the weekly chart for this company. And it's been bullish. Try to find the COVID-19 blip on this chart. There it is. There it is. There's the blip. So the share price back then was $220 to $170. So very bullish looking chart for Novo Nordisk. This is one of the companies I own in my super fund. One of my international companies, or companies I own on an international exchange. I do this through NetWealth. You can do it too, maybe through your own super fund. I'm pretty sure NetWealth, Hub24 have this capability if you know what fund you have to invest in. I'm trying to remember what it is in NetWealth. I have NetWealth Super something, I forget what it's called. But in those super funds, you can invest in almost any company in the world. Maybe not any company. They do have some limitations on what companies you can invest in on some of these international exchanges. For instance, you can't invest in companies that have value of, say, $100 million on the NASDAQ or the New York Stock Exchange. There is a limit, but that limit's there for a reason, and I think it's a good limit. It means you more likely invest in the higher quality companies. And Novo Nordisk is one of those higher quality companies. Chart looks beautiful. Okay, Genusplus. Actually, I'm going to have to show you the daily chart for this. So this is the weekly chart. And technical analysis doesn't work, some people will say. Look at that, the really good support level for this company at 87 cents, this line here. So it fell just after it IPO'd back in late 2020. Share price fell to that level, rose, fell back to that level, fell back to the level again for the third time in April 2023. And whenever the share price fell below this one line, one price, we saw some buying. The reason I know we saw some buying is because on all these 1 day or 1 week candlesticks, you can see a shadow below that line, which means there was buying coming in. And that would have been the time, sort of like a triple bottom, if you will. That was a time to buy. So I was following this company, or have been following this company for a while. This is one of the best IPOs over the past 3 or 4 years because the share price right now is significantly higher when they IPO. Not many IPOs over the last 3 or 4 years can say that. And the share price has just taken off. Now, I was trading this. This was my one mistake. On this breakout, I decided to buy some shares as a breakout, as a trading package. And then I realized shares in this company were illiquidly traded. Probably that was a wrong play to make. And then I sold my shares. So I bought in about a $1, or just by $1. I sold at about $1.20 or something like that. I forget exactly what. Share price tipped to about $1 again back in November. You can see this little dip. And then the share price has taken off. And then I had a look at the results and I went, oh, this is definitely a longer term play. This company might benefit from the infrastructure build we're going to see in the not electrification, but in our energy system over the next 3, 5 or so years. And I think that's why the market is excited about this company. The results were good. And there was a little bit of a dip right here on the 4th of March. That was a good time. It would have been a good time to buy because the last 4 days, the share price just taken off. Beautiful looking chart. And this is in my small cap portfolio. I don't intend to sell my shares in this company anytime soon. So this is not really a trading share. This is more of a or you could trade it because the share price is in an uptrend, but just be aware there is some illiquidity, but some good volume coming in. And if the share price keeps going higher, eventually, and this company becomes more well known, and I did hear this company being mentioned in a podcast just today, which is a good sign moving forward, that as this company becomes well known, as this company spends more time on the ASX and more fund managers become aware of this company, the liquidity issue will be solved, and this could be a good trade, or even a good long-term buy. The other company I bought, another company I bought is Adrad Holdings. This is the company that I do have in my trading portfolio, and I bought at 72 cents down here on release of their half-year results. And I was thinking of taking my profits. Now, if the share, I just want to see if the share price can get above 95 cents. Why 95 cents is because that was the highs we saw back in September. We saw a tiny bit of selling on the Friday, not a lot. Not a lot of selling, but the share price did dip from 95 cents to 90 cents. But this company still looks pretty cheap. But I was just thinking, I bought it 72 cents. I could sell it 95 cents. That's a nice little 25% gain in a few weeks. So I'm always willing to take that bet. But if the price gets above 95 cents, that would be a breakout. Now, what I could do and what I was thinking was taking my profits, and then if the share price does break out above 95 cents on strength, I'll just buy back in and trade it again. You could always do that. And I'm not going to look at the weekly chart for that because it hasn't been trading for very long. It lists on the ASX back in late 2022. National Tyre. This is one I've been thinking about a little bit. It's at a very important level right now. The lows we saw back in June of 2023. Share price has collapsed. Let's have a look at the daily chart now. So I put this horizontal dash line, which is the support level, quite a while ago, and its share price of National Tyre Diagnostics is right on that level right now. It's at 51 cents, and 50 cents is at support level. So this is, or could be, a fairly low risk trade. Thinking it's right now oversold. Share price has really fallen significantly in the past few months. In fact, since the start of 2024, share price of this company has dropped from about 78 cents to 51. So we're talking about 27 cents, 78. So we are talking about a 30 to 35% drop in share price in a fairly short period of time. Now, this company is going through some restructuring. They also did a deal with Dunlop, if I remember correctly, and that has had an effect on their financials. And the reason why the share price has collapsed is because of the financials. Now, possibly oversold and the market is overreacting. This could be a bounce. And if it bounces and the market is more forward-looking, the returns in this potential bounce could be 80 to 100%. Potentially, maybe even higher if they get the financials under control. You can see the share price high for this company is $1.60 back in January 2022. If you look at the weekly chart, if you go back, no, that is all-time high. I was thinking maybe prior to COVID-19, the share price was higher. Yeah, so there is potential here for a bounce at 50 cents. So when I say a low risk, I'm talking you could buy shares in this company at 50, 51 cents, and if the share price falls below 50 cents, that's a small loss you're going to take, but the share price could bounce significantly from here. This is one trade I have been seeing over and over again that I'm not willing to make that has been successful. I've done this trade a few times in the past, and they have been successful trades. I'm talking about PPE, PeopleIn. I did that. I did also that with Develop Global, just buying off the bounce on a support level. Now, it doesn't always work. KMD Brands was one instance where the share price fell to a support level, but it never bounced. It fell through it, and then the company released some bad news. Anyway, so a potential bounce play with National Tyre and Will. So again, I'm just sharing ideas with you. Doesn't mean I'm going to do these ideas. Wiseway Group. Let's have a look at the weekly chart for this company. So again, I was just looking at weekly charts. Share price of this company was really high not that long ago. So it got to 44 cents back in August 2021. The share price of this company just collapsed. I'm pretty sure this company is logistics services. They offers air freight, sea freight, import services. Market cap of this company is really low, $16.7 billion. Share price has been under significant pressure the last few years, dropping all the way down to 4 cents. And then when I looked at the weekly charts, I just saw this massive rise in share price in the past week, up 67% in the week. And I don't know what's happening. Maybe some good news. You can see a lot of illiquidity, so a lot of liquidity issues for this company. We know there's liquidity issues just by looking at the candlesticks. But some reason the market's got interested in this company. Share price has run from 4 cents to 10 cents over since the start of 2024. But I probably, even though I'm sharing ideas, this is definitely one that would be at the bottom of my idea list just because of liquidity issues. But some reason the market's got interested in this company. Could be just traders. I don't know. I have to have a closer look at Wiseway. Australia, New Zealand. I don't know why this company, I've included this company. Might have to have a look at the weekly chart. Yep, there it is. Okay, so I can understand why I've included this chart. Okay, so we definitely have a bottom for Australia, New Zealand. Air New Zealand at 50 cents. The reason why that's a support level, that's the lows during the COVID-19 financial panic, 50 cents. The lows during the June 2022, I don't know what we call that. Remember June 2022 was a really bad month. We saw the markets absolutely collapse, maybe not collapse. For instance, if you go back to the XGO, you'll see the bottoms in June 2022. Here we are, the June 2022 bottoms. And we saw those bottoms, that level be reached again in September of the same year. And you can see in June, the 14th, my birthday, that week, down 6.6% after being down 4.4% the previous week. So June 2022 was a bad month. And you can see that with just Australia. Why do I want to say Australia, New Zealand? Air New Zealand, the bottom during June, in fact, it was reached on the 14th of June that week, is at 50 cents. In fact, the low was 47 cents, but we saw the price bounce. The share price of this company is getting towards those lows, 55.5 cents. So that's why I've included in this particular video, the share price of Air New Zealand is getting close to those lows. So I have all these watch lists. I have one watch list called Daily, another watch list called A-Looks. So these are charts I look at more frequently than other charts. So I've decided to put Air New Zealand just in that chart. If you look at in those watch lists, if you look at the daily chart for Air New Zealand, it's looking pretty ugly, still on a downtrend. But again, share price of this company is getting close to that support level. Okay, the next two companies are related. We have TPG and then Tuas. Okay, for TPG, we need to look at or do we? I don't think we do. So I would say TPG Telecom is in a long-term downtrend, which is portrayed by this sloping downward line. And whenever the share price gets to this downward sloping line, you can see some selling pressure. So the first time was November 2020. It got close to that downtrend line in October 2021. Definitely got to that line in August 2022, and that's sold off. Got to that line in September 2023, sold off. Got to that line in February of this year, and then sold off. And then it sells off. The last few times, it sells off to $4.60. So let's have a look at the daily chart. You can definitely see it. Here's a downtrend line. Look at it. This was an interesting period. So the market wanted TPG Telecom to break above that downtrend line, but it just failed to do so. And we can see a really interesting support level for TPG Telecom is around 460. Again, it's a zone. And we've seen the share price of this company get to 460 or around that level 1, 2, 3, 4 times in the past 16, 18 months. And right now, TPG Telecom is at $4.65, right on this level. So it's a support level right now for TPG Telecom. And this is another company. I've already put it into my daily watch list. And the whole reason is because of where it is right now. Now, mind you, the downtrend is still in play. We've got this support level. So maybe the next time the share price goes back up, it could go back up to this trend line, which could be around $5 or $5.10. So not much, maybe a 10% play here, but then it could break out. I don't know. Now, I will not consider TPG Telecom to be a high quality company anymore. Used to be, but not anymore. A company that wants to be a high quality company is Tuas. The guy who ran TPG Telecom, what was his name? David Teo. Left TPG Telecom and then has moved into Tuas, which I believe is in Singapore, and they're offering their services to Singapore customers. And this is a beautiful chart. So unlike TPG Telecom, this is a beautiful chart. This is just an idea. It's just pulled back from all-time highs. This is me trying to teach myself to get away from biases. When I see a breakout, just play the breakout. So Tuas Limited broke out in November. This is a beautiful breakout. And you can see why $2.20 was a really important level for this company. We saw the share price of Tuas get to this level back in 2021, late 2021, got to this level again in June 2023, got to the level again in September 2023. So let's just zoom in a little bit more. And then on the 13th of November 2023, share price of this company broke above that level on strength. Some good volume coming in. You can't really see it here, but there was some good volume. The share price 2 days later tested that, and it didn't fall through. That's a successful test, and the share price just zoomed higher. So I, based off what I am doing now, and if I was following Tuas at the time, I would have bought in at around about $2.20 to $2.30. And right now, the share price of this company is at $3.40. This would have been a really good play, up almost 50% since then. Is that right? Yeah, up 50% since then. So the main reason I probably at the time wouldn't have bought into that breakout is simply because this company's not profitable just yet. I'm going to keep those biases away from me. Instead of focusing maybe more on the financials, just look at the breakout. The market is seeing something that maybe I am not. And that's why the breakouts can be important, because they're showing you something that maybe you're not seeing that the market is seeing. That's one lesson I've learned over the past 2 or 3 months. Just play the breakout. Okay, PeopleIn. I've already mentioned PeopleIn. So if you have a look at the weekly chart for this is an ugly looking chart. So PeopleIn has a very important support level. That's $1. $1 is really important support level for numerous reasons. First reason is $1 is a whole number. And for some reason, individual investors love whole numbers. I don't know why. I hate whole numbers. They're boring. But for some reason, individual investors just remember whole numbers. And they remember PeopleIn got down to a low of about $1 during the COVID-19 financial panic. Share price in this company fell from $4 to $1. So what was that 75% drop in share price over a 4-week period. And then it bounced off $1. So we just know that $1 is a very important level for this company. It's a whole number, and it's also the lows we saw during COVID-19 financial panic. It wasn't the absolute low. The absolute low was actually 90 cents, but we saw a bounce off $1. So what happens recently? And I traded this. I'm very happy with this trade. We saw the share price of PeopleIn get down to $1 back in December. Massive volume coming in. Remember that Bitcoin. If you didn't watch or skip that Bitcoin spiel I made, have a look at that particular part of this video. We saw really big volume coming in Bitcoin when it reached its low, and we saw the same thing with PeopleIn. Look at that massive volume coming in at PeopleIn when it got down to below $1. We saw people rushing to buy, maybe not people rushing, to buy in at that point. Now, the reason that's important is you want to see increase in demand, and that's exactly what you saw. And it's really important to note that when you see a spike in volume when the share price has been falling, that's important. Just like when you see a spike in volume when the share price is rising, that can be really important. And that signified at that point in time, the bottom might have been reached. But there was a reason why the share price was dropping. So I just expected a bounce. And the share price bounced in, 5 trading days? So I bought in just below $1. I think I bought some shares at 99 cents. And I sold at about $1.20, $1.25 about a week later. So that's a 25% gain in less than 1 week. Now, you might think, that could have been a mistake, but I didn't really care what the share price was going to do after that. I just want to lock in my profits because I wasn't sure what the share price will do. The other reason I sold at that level is because the share price moved into this red shaded area, which is and can be a resistance level. And it sort of acted like a resistance level for a while. Share price looked like it was going to take off. Share price went to a high of $1.45, but then the share price collapsed. And funny enough, when the company released, must have been their results on 26th of February, share price fell to a low of 98 cents and closed at $1.13. So a lot of buying came in when the share price of this company fell below $1 again. So there's a lot of support for this company at $1. A lot of buying comes in because we all know, we all should know right now that the low in this company is around $1 or just below $1. So if the share price falls below $1, you buy. Now, I missed it on that day, and we didn't see much of a bounce, but the share price has continued to fall. And right now, the share price of PeopleIn is at $1.01. Now, here's the important thing. If we see the share price fall below $1.01, we don't see much volume coming in, that means that support level is significantly under threat. And I think that could happen for PeopleIn. Now, if the share price falls even further, with this company having a markup of only $105 million, according to TradingView, dividend yield 9.9%, could be a dividend trap, and price earnings ratio of 10.3. If their earnings don't really suffer all that much, eventually you will see value investors come in. They might see value with this company. That's potential moving forward as well. But $1, very important level for PeopleIn. I'm going to see what happens with this company. Do I have this in my daily watch list? No, put that in my daily watch list. Oh, JCurve. Definitely have a look at the weekly chart for this one. If you like this company, I'm not sure why you would, because this company is not growing all that much. The company has a revenue of $16 million, is not profitable, has been profitable 2 years out of the last 5, is some sort of software company. Is it a software as a service company? Engages in business of developing software applications and solutions for corporate and government interests. What they do is not that successful. We don't see massive growth in revenue, that sort of thing. But I was just having a look at the weekly charts and I went, oh, this just on the weekly chart looks actually interesting. In fact, I'm going to put 2 lines here, because 2 lines is really important for this one as well. Okay, so if you go back, and this goes back to 2018, whenever the share price of JCurve Solutions gets between, say, 2.5 and 2.2 cents, we see that as a really good support level for this company. And possibly that's where we are. Well, not possibly. We are at that level right now. Share price is at 2.6. We did see share price bounce, so just above that level right now. The only problem I have, no volume is coming in. And I can probably understand that. I don't think many people would probably even know this company existed. A markup is 8.5 million. There you go. But I would expect that some people who have been aware for this company for a while might think that if this company can grow a little bit and maintain, or not maintain, but show the market they can become profitable and generate cash flow at a more consistent way, that this is a really cheap level to buy a company. So maybe you will see some support at these levels. I don't know. I don't know. And I will probably put this company below. What company did I have it really low? Wiseway. I'd have this company below Wiseway just now. Or maybe just above Wiseway. I don't know. But again, I'm just sharing ideas with you. Joyce Corporation. So I have no lines here at all. Oh, I can see why I was interested in this. We saw some really good volume coming in the last 2 weeks. Some really good volume on some good price action. And if we have a look at the daily chart, so I would have seen that in the weekly chart. And then I went to the daily chart and went, oh, this looks really interesting. And for some reason, I didn't put a line in here. That's the line. That's interesting. Our share price has broken above that little high, or that highs we saw in September, and some really good volume coming in after that high was reached. So looking at that last, say, 4 or 5 months, some really good volume coming in during that period. Particularly compare that 4 or 5 month period to the previous 4 or 5 months, the first half of 2023. No volume as the share price fell. So there's no interest in this company during that period. Now there's interest, and that's why the share price is going higher. And the last time the share price was this high was back in February of last year, a 1-year high. Markup 102 million, dividend yield 8%, price earnings ratio 11.3. This company has many facets to it, divisions. Do they own the auction thingy? No, they don't. That's another company. I'm getting some of my companies mixed up. Engages in operating retail kitchen and wardrobe stores. Founded in 1886. This company has been around for a long time, according to TradingView. What company owns the auction? There's a company that owns a bit of an auction house or something. I forget. All right, Sandfire. So remember I showed you the copper price, and nothing's really happening with copper. But then I had a look at Sandfire, and then I just noticed that Sandfire in the last 2 weeks has broken out. So this is just me again looking at the weekly chart. So there's a really interesting level for Sandfire around about $7.50. So Sandfire got to 7.50 cents in February 2019, February 2022, got close to it in April 2023, got close to it in January 2024, and has broken out. The last time Sandfire share price was this high was way back in 2018. We're talking about almost a 6-year high in Sandfire prices. Don't know why. And here's the chart. The daily chart looks pretty good. And look at that. Perfect. Price of Sandfire got to 740 in January and then pulled back. Got to it again in January, late January, and then pulled back. And then we zoom in a little bit higher. You can see share price got to 740 again, and then it didn't pull back. So there was a fight between the bears and the bulls for about 6 or 7 days, and eventually the breakout and the bulls won towards the end of February. And that's why the price of Sandfire has gone higher. So a potential breakout when it comes to Sandfire Resources, it could be just copper bulls are just excited about this company. That could be it, even though copper prices aren't going higher. That could be all it is, that there's no other really good plays or copper plays on the ASX. It's just Sandfire. It's not absolutely true. And when I say copper plays, I'm talking about a sole copper plays. I'm pretty sure Sandfire is only a copper producer. You could buy BHP. I'm pretty sure they are a copper producer. And some of the other big mining companies are probably also copper producers. But sole copper producer, Sandfire, and there's not many others on the ASX. Sims Metal. I've traded this company in the past, not to complete success. And again, I just look in the weekly charts here. And where Sims Limited is right now is at an important level. So $12 is important for this company. And it goes all the way back to 2021. So let's have a look at how many times Sims Limited has pulled back to $12. 1, 2, 3, 4, and this is the 5th time. The last time the share price of Sims fell below $12 was in November 2022, and the share price recovered really quickly. And we have seen share price of Sims Limited get below $12 in the past week. So let's have a look at the daily chart. Look at that. So it got below $12 for a very brief period of time in October and then pulled higher. So you could have bought this company at about $12 or just above $12, and the share price went all the way up to $15 in a fairly short period of time. Will it do the same again right now? I don't know. So this could be just like, what was it, TPG Telecom? Was it that one or was it another one? Oh no, it was National Tyre at 50 cents. This could be just a low risk bounce play that you might expect Sims Limited to bounce off $12. And if it doesn't, you sell at a small loss. Oh, Nine Entertainment Group. Let's have a look at the weekly chart. I'm pretty sure I just had a look at the weekly chart for this. I went, oh, that looks bearish. This is maybe not an idea, maybe a shorting idea, if anything. So Nine Entertainment has been trading in this range for the last 2 years. The top of the range has been around about $2.20. The bottom of the range around about $1.80. And you can see it just, in fact, let's have a look at the daily chart. You'd be able to see it just on that chart. Yeah, so I'm sure people have been trading this. Traders have been trading this. The top of the range has been reached 1, 2, 3, 4 times. The bottom of the range, 1, 2, 3, 4, 5 times. And what you're waiting for here is a break to above the top of the range or below the bottom of the range. And we have definitely seen the breakout below the bottom. So this is a bearish breakout. And it would have been maybe on the back of the release of their results. Yeah, 22nd of February. Share price on this day fell 8.8%. Now, on this day, what happened? And following days, what happened is some non-technical people saw the share price of Nine Entertainment Group for 8.8%. And they think, oh, there's some value in this company right now. Share price of Nine Entertainment Group is $1.70, when in the past it's been as high as $2.20. I see some value. And that's why we saw some buying in the next 2 days. And that buying dried up fairly quickly. In fact, the share price moved back to $1.80, which was the bottom of the trading range. This was a test of that breakout level. You see this a lot. It tested it, and it went, nah, the market went, nah, I don't want it. I don't want to break through again. I don't want this to be a false breakout. And then on the 29th of February, share price collapsed 4.4% and it fell another 2.3%. The next day, that was a bearish sign and the share price has fallen lower. Some really big volume coming on those 2 days as well. Look at the volume, some big volume. And that volume on those 2 big down days was much greater than the volume on those 2 days or those 3 days when the share price actually recovered back up to that breakout level. So always look at the volume. Volume tells you a lot. So that's a bearish chart. Going from a bearish chart to a bullish chart, media. In fact, I'm going to put a line here, right there. As we saw back then. The reason why this is bullish is if you don't look at the weekly chart, look at more the daily chart and just draw a line there. You can see it breaking out. Company must have released something really negative on the 3rd of May, 2023. Share price down 23.9%. This could have been a bounce. So, yeah. I have seen this on occasion. On that one day, a lot of buying did come in. So the low on that particular day, $1.08, which is much lower than the share price where it closed, which was $1.24. That's actually quite bullish. Even though the share price fell 24% on the day, a lot of buying came in when the share price fell to $1.08. And that is telling me that with that buying, that there is a lot of demand when the share price of this company falls to that level. And that's why when the share price dipped to about $1.12, we saw the share price recover again. And the share price has recovered all the way from $1.08 to $1.84, and the share price has broken out above the price we saw before the share price collapsed back in May. So this is just a breakout. A share price broke out on the 21st of February. It could have broken out on the release of this company's results. I don't know, but this is the definition of breakout if it did release or if it did break out on the release of its results. The only thing, oh no, there was pretty good volume coming in. Yeah, I was going to say maybe the volume was a little bit substandard, but some good volume coming in. Yeah. And the last time the share price was this high was way back in 2021. Media. Oh, okay, yeah. Weekly charts. Sometimes weekly charts you get a different perspective. So if you look at Bisalloy Steel and just look at the daily chart, you might not think much of it. Sure, it's a little bit higher than the start of the chart, but yeah, not much of an uptrend. Bit of an uptrend developing here. A lot of volatility too. You can see the share price went from $2.75 down to $2 in about 3 weeks back in November. But when you look at the weekly chart, you get a different perspective. This chart, well, this company has been in a beautiful uptrend since 2017. When it broke out, this is the definition. Well, maybe not. Oh yeah, this is a breakout. Yeah, this is a breakout. Back in July 2017, breaking out above 50 cents. That was a beautiful breakout. I wish I was trading this company back then. Share price has gone from 50 cents to $2.65. And to be honest with you, share price of this company has been in uptrend ever since then. A little bit of volatility in there, but yeah, there's no reason to get out if you're in this company for the long term. Beautiful weekly chart. So daily chart doesn't look as beautiful, but the weekly chart definitely looks beautiful. Another chart that looks beautiful, and this is a company I do own. And again, I should put in when I bought it somewhere here. I forget exactly when. This was, again, a more of a long-term play. This company is now profitable. That's another reason why I bought. RPM Global, they're now profitable. And they broke out from a downtrend on the 11th of December, or in December. So the share price was in a downtrend. Let's have a look at the daily chart first. And the reason why that's a downtrend, hopefully, is obvious. So you draw down trends. So you can see the highs here, and the next major high was here, then the next major high was here, and they all connect almost perfectly. And then the next major high was here. So all these highs are lower, but they all connect to this downtrend line almost perfectly. A lot of times it's not that perfect. So what you're waiting for when you see that perfect downtrend line is a breakout. Now, I was a shareholder at this point in time, and I wasn't really following the day-to-day movements of this company, and the breakout was on the 14th of December. Perfect breakout of the downtrend. Beautiful. And look at that. So this is, breakout of a downtrend. And look at the volume coming in the last month or so. Beautiful volume coming in as the share price has gone higher. This is actually what I want to see. When the share price takes off like this, you want to see higher volume, which is telling me fund managers are becoming interested in this company. And there's a reason behind that. This company is profitable, and more than likely, they're going to grow significantly over the next few years. When I say profitable, can't look at really the annual data. So if you look at the half-yearly data in TradingView, in the last half year, this company had revenue of $53 million, but net income of $7 million. $7 million. The previous half year, they had profit of $2.5 million. So there are some analysis. We're looking at that information at this company's half year results and going, wow, this company could be a long-term buy. Another reason I've included this company in this particular video is the highs we saw back in 2021 were around $2 or between $2 and $2.25. The share price of this company is at $2.21 right now. Did I say $2.20 and $2.25? Again, it's a zone. And the share price of this company is $2.21. So it's right in that resistance zone, those last highs we saw back 3 years ago. Doesn't mean there's not going to be much resistance because that was 3 years ago. There will be, because people know the all-time high for this company share price is around $2.25, and we're at that price right now. So there will be a little bit of resistance moving forward for this company, but the volume coming in fills me with promise. The share price of this company can go higher from here. Appen. Why did I want to show you Appen? I don't remember. This could be, why do I want to show you Appen? Could be just the volume. The volume. So the share price has taken off in the last month or so, and the volume has increased significantly. I think this is more of a plaything for day traders at this point in time. The reason I say that is actually proof. I actually am a member of a few day trading Facebook groups and the like, and Appen gets mentioned a lot. So this would be a plaything for day traders right now, and that would concern me a little bit. I prefer to be away from day traders' playthings. Now, I'm not sure why I included it otherwise in this video. So these sort of day trades, I will look at 5-minute charts. And the 5-minute chart looks beautiful, although a little bit of weakness coming in late on the day on the Friday. A really bullish move on the open. It's sort of a gapped up. That's could be a bearish sign. It gapped up and then selling came in almost immediately and filled that gap almost immediately. And the share price struggled to get above 80 cents. It got above 80 cents on open, struggled to get above 80 cents. This could be a double top. Possibly the top has been reached. And I wouldn't be surprised to see the share price of Appen fall away from here. To what level? No idea. You can just follow the 5-minute chart. So I prefer to play more certain things. There's a lot of risk in Appen right now, in a lot of ways. And I will not be trading this the way I trade anyway right now. Maybe if I was day trading, I would. I've had a go of day trading in the past, and I have been successful, but it's a lot more stressful, I could say, because you have to focus on charts all through the trading day. Just like with Appen, you've got to follow these charts. I'd probably look at 5-minute charts. If I was a day trader, look at 5-minute charts. But you have to follow this almost continuously. And maybe I would have gotten out when the share price was at 76 cents. When would I have bought? I don't know, because I'm not sure when I would have started following it. So volume really started to pick up. When did volume really pick up? Probably a month ago, maybe a few weeks ago, volume started to pick up, which would have been day traders, I think. Okay, GDC, Global Data Centers. They have the right name. Having the name data center in your name is exciting. That could be the place to be. A company I want to buy is NextDC, and maybe I will. Okay, so weekly chart. All-time highs. And this is why I've included this company in the chart. It's just gone through all-time highs. And if you look at the weekly chart, you can see when this company listed, which was just before the GFC, or not the GFC, the COVID-19 financial panic, share price on the high on that first week was around $2. Share price of GDC got to around $2 back in September 2021 and November 2021, but really struggled to get above $2 And then this company's share price fell from $2 all the way down to $1.05. Some big volume coming in just after the low was reached, and the share price went on a tear. Share price went to $2 and really struggled to get above $2 for about 5 or 6 weeks. You can see share price just going higher and below that level for about 5 weeks. And then it looks like the bears won for a period because the share price started at 4, went down to about $1.90, but not a lot of volume during those 6 weeks. And the share price recovered, got to back up to $2. Let's have a look at the daily chart now. Got back up to above $2 on the 21st of February, and then selling came in. So again, those bears seeing the share price get above $2 going, oh, we have to sell because this is resistance area. And then in consecutive days on really good volume. That's the other thing to notice. On these 2 days when there was a little bit of sell-off, the volume was low, and then we saw some really good volume coming in on the 28th and 29th of February. The share price went above $2 on strength, went to $2.20. And then we saw a little bit of selling come in, not a lot, really low volume. Share price pulled all the way back to $2.05. Tested the breakout. And looks like that test was successful. And when I say successful, I mean the share price didn't fall below the breakout level. And the market was happy. And on the last trading day, on the 8th of March, share price increased another 4.8% on some good volume coming in. I think this is a breakout. I'm assuming this company is or has data centers. I could be completely wrong. Maybe they just make investments in data centers. I don't know. But anyway, a company to put on your watch list and just an idea for you. The next company I want to look at is a company. I get ideas from everywhere as well. And I did hear someone mention a company called Race and Sport. I went, there's no company called Race and Sport on the ASIS. What the hell are you talking about? Race and Sport. So I actually had to Google Race and Sport. And what they meant was RAS Technology. RAS, Race, R, and A, Sport, S. RAS Technology, T code RTH. This company is into tech in regards to betting, or gambling, that sort of thing. Not even sure what they do within regards to that. So RAS Technologies operates as an investment company which provides fully integrated premium data, enhanced content, and SaaS solutions to the global racing and wagering industries. The other main thing I saw when I had a very quick look at this company is they are moving very quickly towards profitability. So increasing revenue, not quite profitable just yet based off the last half year, but they're getting very close. And the other thing I noticed is when I looked at the chart, very noticeable shift in sentiment around this company. So I wasn't following this company at all, but a noticeable shift. Its share price absolutely fell off a cliff back in 2021, 2022. Share price fell from $1.75 all the way down to 37.5 cents. But it stabilized. Let's have a look at the daily chart now. It consolidated. Beautiful consolidation period. And then the share price broke out. And I put a line right here. So the level I would have been looking at if I was following this company would have been that level right there. Just getting above the old highs we saw back in August 2022. It struggled for about 2 months. It struggled to get above that level, and then eventually it did. Now, I would say just by looking at this chart that it is liquidly traded, but the share price is in a beautiful uptrend. The one thing I'd like to see is higher volume. Now, we saw some really good volume coming in May of last year. That would have been sort of the first sign the sentiment was shifting in this company. And I have read a few places now that sometimes volume moves first, or volume moves before the price. This would be an indication of that the volume, higher volume, was moving first. We even saw some more volume coming in July before the share price started to move higher. So it's interesting that volume, sometimes you'll see the increase in volume before you see increase in price. And yeah, maybe RAS Technology is a company to look at. Square. Oh yeah, so this is obvious. This one's obvious. Square has had trouble getting above, or Block, I should say, Square 2, SQ2. I always say Square when it comes to this company, but they changed their name to Block. Now, it's obvious. As soon as I saw the weekly chart, I went, let's have a look at the daily chart. And you can see, pretty obvious, The share price of this company is right on a resistance level at around about $120 or so. You can see it's very non-smooth candlesticks, and this is an indication that the main listing of this company is on another exchange. You'll see this with BHP as well. Now, I don't think the main listing is on BHP, but our share price, when it comes to BHP, really follows the American market, and you see the same sort of gap, a lot of gaps in this chart. That's probably the best way to say it. A lot of gaps from one candlestick to the next, and that is an indication that this company is listed on another exchange. So if you go back to Square or Block again, this company is, or its main listing was another exchange. So the price of this company will mirror, maybe not perfectly mirror, the price of Block on the NASDAQ or the New York Stock Exchange, whichever it's listed. Now, Block did release some favorable results. This could have been a breakout. So the share price on the 23rd of February increased 16.5%. Share price went to the resistance level and then pulled back. So does it perfectly mirror? One thing I'm going to look at right now is whether Block on the New York Stock Exchange has the same resistance level. Well, it's fairly similar. Yeah, it's fairly similar. Yeah, it's fairly similar. Get rid of this. I think that's no longer relevant. So that's fairly similar. Yeah, so they sort of mirror each other. And a way to play Block is just to buy SQ2 on the ASX. Simple enough. Possible breakout for Block. Possible. Not definite. Possible right now. Okay, let's have a look at some other companies. Sonic Healthcare. Let's do these fairly quickly. Sonic Healthcare. Okay, it's fairly obvious right now why I included Sonic Healthcare on this particular video, or in this particular video, and you'll be able to see that when we look at the daily chart. Possible high quality company on the ASX. I think I'm sort of in between the two, but look what Sonic Healthcare share price has done in the last 4 trading days. So 28.50 is an important level for this company. Got to this level back in February 2023, October 2023, November 2023, and recovered. Got to this level again in 21st of February 2024 and recovered, bounced off 28.50. But unfortunately, share price has fallen below that level and then has bounced. So this could be a test of this breakdown. So this could be a fairly bearish move for Sonic Healthcare, and this support level could be broken. And I think the next few trading days is going to be very important for Sonic Healthcare. This could be just a little bit of a test. Sonic Healthcare. ALS, I did have this on my daily watch list because it looked like it was breaking out, and it did break out. Share price then pulled back. And look at the last 4 trading days in this company. Good volume coming in. Share price has completely taken off. So I actually did take this company off my daily watch list. I've put it back on because of what's happened the last 4 trading days. If we have a look at the weekly chart, you'll be able to see that. So I was looking at the weekly chart first. I saw the share price rally in the last week. But what's happening with this share price right now, it's moving into a really strong resistance zone, which is portrayed by that. I'm going to get rid of this line here. And that's a very important zone above or between $13.50 and $14. That's probably the only reason I'll be holding back from taking advantage of this potential rise in share price. It's moving into a really important resistance zone. ALS Ltd. Oh, did I do a selling video on Paragon Care? I think I did. This is a potential breakout. So there is a merger between Paragon Care and this other company. I think it's called C2. It's not listed on the ASX. On this particular day, share price rallied 41.7%. I just wanted to see what happened with the share price the next few days. So the next day, share price fell 7%. Volume was much lower. Look at the good volume coming in the next 2 days, share price went sideways. So there is still a fair bit of demand for shares in this company, but also a bit of supply as well. So I'm not sure who's going to win between the bears and the bull. This is a potential breakout. That's all I'm going to say right now. Potential breakout. Share price could go higher from here, just like Mayne Pharma. This is not a potential breakout. This is a breakout. I wanted to follow what happened with the shares in this company after the company released the half-year results because they look pretty good. It was on this day here, the 26th of February. Share price, this was not a breakout because the share price was higher like a few months previous to that. But a lot of buying came in, a lot of volume, some good volume coming in, and the share price moved back up, went above those highs we saw back in December of last year. So this is a breakout for Mayne Pharma. Now, I've had not bad experiences, but this has been, I've always considered this company to be a really low quality company. You can see, if you look at the weekly chart, share price of this company was as high as $42. I'm pretty sure it wasn't $42. I'm pretty sure this company's gone through some sort of consolidation or something like that. Not consolidation, what's the other thing? Yeah, consolidation. But this could be the signal. This could be the breakout. Again, I've got to leave or teach myself to leave my biases away from my decision making because my bias in regards to this company is really low quality company. Why would you even think about buying this company? And that could be important because then that translates to fund managers. Why would fund managers want to buy this company? But things might be turning around for let's say farm main major for Mayne Pharma. This looks like a breakout. Definitely daily. This looks pretty good. Looks pretty bullish for Mayne Pharma. Okay, Telix. I do have two lines for this company. And you can see why I put these two lines. This is a resistance area between $12 and $12.50. So Telix Pharmaceuticals has gone above, or in this level, this zone, 1, 2, 3, 4, 5, 6 times in the past 9 months. So have a look at the daily chart. 1, 2, 3, 4, very close, 5, 6 times in the past 9 months. And the last time I got into this zone was the 29th of February and the share price pulled back, which is understandable. So what we need to see is a break above $12.50. The only time the share price of this company got above $12.50 was back in June of last year. And you can see there's some shadows on those one-day candlesticks, which means there was extra supply of shares on the market. So naturally enough, that zone between 12 and 12.50 is a resistance zone for Telix Pharmaceuticals. As a long-term shareholder of this company, I don't care. But I will be willing to trade this company if I see it break above 12.50. I will trade Telix Pharmaceuticals and then take my profits that I do make and put them back into Telix Pharmaceuticals to grow my holdings in a company. I was umming and ahhing about what gold companies I would show. I had about 4 or 5 possible. I decided with Capricorn Metals because when I had a look at the weekly chart, not only is this a breakout, we are looking at all-time highs for this company. One of the lowest gold producing companies on the ASX. Even the weekly chart looks really good. Weekly chart looks beautiful. We had a long period where the share price went sideways, a long consolidation period. And when I say sideways, there's a fair bit of volatility in that sideways movement. So the bottom of the range is $3.90, top of the range is around $5. But the old highs we saw were around $5.20 for this company, and the share price is now at $5.21. So a potential breakout for Capricorn Metals, company I have traded in the past during this beautiful uptrend. I traded Capricorn Metals back then. I might trade it again. I don't know. Australian Ethical, I've traded this company in the past unsuccessfully. Sold out a little bit too quick. I think this was a daily chart. This is more of a daily chart. And, that's right, yeah. So there is an uptrend developing. So we had the low here back in May, the next major low in October. So draw a line between those two lows. And what happened? 3 trading days ago, the share price of Australian Ethical bounced off that uptrend. It bounced off it perfectly, almost perfectly. Look at it. Bounced off it. Possible bounce off the trading or the uptrend. Although otherwise, the daily chart doesn't look that bullish. Maybe longer term, if you look at the weekly chart, maybe it looks better. Maybe. Anyway, so this is just a possible bounce off a trend line. Woolworths. Oh, I know why I included Woolworths. If you look at the weekly chart for Woolworths, it's pretty obvious that $32 is an important level for this company. It bounced off it back in October 2022, and in the past week, it's bounced off it again. In fact, on Thursday, it bounced off $32. The low on that day was $32.05. Is this a bounce off a support zone or support level? Maybe. For those who like this company, I probably would say, without even looking at it, this company is probably still overvalued. Has no price earnings ratio. How can it have no price earnings ratio? Did it not make a profit in the last quarter or last half year? It says it made a loss. So if you go back, look at the last 4 years, this company made a profit of 1.6, 1.6 to 1.6, 1.2. So if you just assume this company has a profit of, say, 1.6. Actually, no, let's be conservative and say on the high side, profit of $2 billion in this financial year, which I think will be a little bit being overly optimistic. That means this company still has a market cap or a PE ratio of over 20. That's ridiculous for this type of company. Absolutely. I don't care if it's a defensive company. It's a very low growth company. For very low growth companies, you want a PE ratio of, say, 10 to 12, not 20. That's silly. But again, when it comes to charting and technical analysis, I don't care about that. I'm just going to trade the chart, and there's a possible bounce for Woolworths Group. And also, there's been some silly negative sentiment in this space around Woolworths and Coles because people think they're price gouging, that sort of thing, which is absolutely ridiculous. They're not really doing it. Sure, some of the margins may have increased a little bit, but let's have a go at insurance companies. Those margins are stupid high right now. They're price gouging us, in my opinion. But anyway, so impossible trade when it comes to worse. Now, if I was trading this and say I took a position at $32, what's the upside? 10%? 20%? $35, $38? 20%, maybe? 20%? Okay, now I'm going to show you 4 financial companies: Bendigo, ANZ, Westpac, and Solvar, and then 1 energy company. Now, I am not, and I think that many of the banks look really expensive. Some of them don't, but again, I've got to keep my biases away. Now, the first one is really interesting because I had to look at this company first. This is Bendigo and Adelaide Bank. This is the weekly chart. And when you look at the weekly chart, it's been in a long-term downtrend since 2015. And this is perfect, another perfect downtrend. So if you just connect all the highs, well, there's sort of a high there. You can't really see it there. No, there is no high there. Here, 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 and here. So Bendigo Bank is right on the downtrend line, but there's a lot of bullishness in the banks right now. There is a potential breakout when it comes to Bendigo and then Adelaide Bank in terms of the long-term trend, which has been in place for about 9 years. Otherwise, chart looks pretty ugly, apart from the last few weeks. But if you look at the daily chart, it's starting to look bullish. The other interesting thing is if you draw a line here, so Bendigo Bank, if it gets above or gets $10.20, what that would mean, it's broken above the downtrend, the long-term downtrend line. It's also broken above the highs this company saw back in January 2023. So it's broken above 2 resistance levels. So keep an eye on Bendigo Bank. It's starting to look maybe interesting for a potential breakout. Now, Adelaide Bank and Westpac are a little bit different. These are great companies that are breaking out right now when you look at the weekly chart. ANZ is now at almost a 6-year high. The last time the share price was at $29.81 was in 2018. And we can see definite resistance level at about $29. So this could be a breakout. And this is the definition of breakout. So the first breakout was back when it got above $26. That was in early January. The share price kept on going up. This is, I'm going to trade ANZ back. I'm going to tell you right now, I am going to buy in, particularly if I see a share price dip back to $29. If I see that, I'm going to take a trading position in ANZ back. PE ratio of this company is only at 12.9. I'm going to actually test that to see if that's actually true, because compared to CBA, this is a really cheap company, and it's possibly breaking out. So even though I don't understand why there's a lot of bullishness in the banks, again, I could be completely wrong, and I should just trade the banks just based off what I'm looking in the charts. This is a beautiful breakout for ANZ, and I think the same is true for Westpac. Very similar to ANZ. It's broken out. And last time we saw it this high was back in June 2021. And actually, no, last time we saw it this high at 27.70 was in 2019. And it's broken above the highs we saw back in June 2021. So it's sort of subtly different than ANZ, but both companies are breaking out. Beautiful. So maybe I could do trading positions in both. Oh. So I'm willing to do that. I'm willing to, and the PE ratio for Westpac is 14.2. Now, you might say, what about CBA? Let's have a look at CBA. All-time highs, I believe. So CBA broke out in December at around $111. So all-time highs. No, I'm more bullish, and the PE ratio of this company is 21. That's ridiculous for this company. I'm telling you right now, but the market remained irrational for a long period of time. This is irrational buying for CBA. And I could be wrong though. This company will have to show significant profit growth in the next year or 2 years to justify where it is right now. Okay, a company called Solvar, which is not really a bank. I'm pretty sure this company used to be called Money3, sort of like a debt collector. I could be wrong on that. I could be completely wrong. Non-bank credit provider. I knew it had something to do with credit. Is focused on provision of automotive finance in Australia and New Zealand. Firm engages in providing flexible, secure. So it's loans. Oh, okay. So if it's loans, I can sort of understand why the share price is doing what it's doing. Okay. So why do I like to have a look at weekly charts? Because you get a different perspective. So this is the weekly chart for Solvar going all the way back to 2014. So we're looking at a 10-year chart right here. So back in 2015 and 2016, share price of Solvar, which used to be called Money3, went to a low of about 80, that line has to be straight, about 85 cents. During the COVID-19 financial panic, share price bounced off around about 85 cents, not perfectly, about 85 cents. Share price zoomed higher. In fact, it went from 85 cents all the way up to 360. Look at the chart, really negative chart, really significant downtrend. Share price is just falling lower, no end in sight. Share price just fell through a little support level, a weak support level, which is right there. The last two lows we saw, it's just fallen through that. And the next level is 85 cents. Not much to go before it gets to that level on the long-term support level for Solvar. That's the reason I've included this chart, because if it gets to 85 cents, this could be a really interesting buy, the long-term support. And the last company I want to show you is Karoon's video's been long. Is Karoon. Why am I showing you Karoon? Now, you can't really see it on the daily chart. So again, this is or show you the benefit from looking at also weekly charts, maybe even monthly charts. I know some technical analysis look at monthly charts and only look at monthly charts. I don't understand why they do it, but they do it. So if you look at the daily chart for Karoon, it looks pretty ugly. It looks like it's in a downtrend. So it looks ugly. So let's have a look at why I was not interested, but why I had a moment when it comes to Karoon. In fact, I looked at Santos and Woodside before this, and I went, why is anyone interested in those two companies? But I did not have the same feeling with Karoon. So if you look at the long-term chart, it's recovering. The time to buy this company was back in 2021. But when I actually zoomed in a little bit more, I just noticed that whenever the share price of this company falls below $1.90, we see buying coming in. The reason I noticed that, I'm going to get rid of a lot of these other lines here. Get rid of everything. The reason I noticed, if you go all the way back to 2023, March 2023, in fact, whenever the share price of this company got to about $1.90 or below, you see a lot of buying coming in. And the reason I know there's buying in those weeks when the share price falls to those levels is on these 1 week candlesticks, you can see a tail below. But now that's not a signal in itself because you see those tails, those shadows elsewhere. But the other thing we've seen in the last 2 months is when the share price gets below $1.90, we do see some buying. Again, we see some tails on these 1 week candlesticks and some pretty long tails as well, which tells me the market is interested in this company at $1.90. So if I saw Karoon get to about $1.90, I might become interested in this company. In fact, if you just look at this one level, this $1.88 level I've got here, that's a pretty interesting level as well. A share price of Karoon falls below $1.88 for a short period of time, and that's the time to buy. Otherwise, that's the only interesting thing I can see with Karoon. I think the market is over negative around their acquisition of their Gulf of Mexico assets. I think their results were not that good either. Some good volume coming in though. Anyway, that's all I've got for this video. If you have any thoughts, any questions, just leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.